Hi everyone, hope you're all doing well, and today we're going to do the video that we were supposed to do yesterday until Chef made an acquisition. So today we're just going to go through a couple of stocks that I own and a little bit of news that's come out of them for stocks. I was debating which one to do and I thought, you know what, let's just stick them all in one video and talk about them for 2 or 3 minutes rather than too in depth. So hope that's alright, and if it is, you could hit the like button, that'd be absolutely amazing. So yeah, starting off with number one is Tesla. So it's worth talking about this one. This was news that more happened on Monday rather than yesterday or today. So as you probably know, Tesla has come now $1,000, and the news came off a order from Hertz. Now I was like, what? I'm sure Hertz was pretty much going to go bankrupt a couple of months ago, but yeah, apparently they've put an order in for 100,000 EVs. How they've got the money for that, I don't know. I don't follow Hertz that much, but yeah, that is a big order, and obviously because of that order, it pushed Tesla over $1,000, and also it pushed it over a 1 trillion market cap. Now this is absolutely bonkers because only the last time we talked about Tesla, which was only a few days ago, we were talking about Tesla being a 900 billion market cap, and it has added 100 billion to its market cap in a couple of days, which is absolutely bonkers as it joins its $1 trillion club. Now it has been on a very good run, Tesla, as you can see. From about May time, you can see we're up about 75%. Personally for me, I'm up about 65% on this one. And it is a little bit tricky now because you do look at this order from Hertz for Tesla, and I think it's not the order that sent it up in that share price. I think it's the recognition of how good Tesla is now, that people are coming in and big major companies are coming in and ordering 100,000 EVs from them. And I think that kind of lines up with, well, if Hertz are doing it, there's going to be plenty of other companies that are going to do that. And as well as Hertz ordering these 100,000 Teslas, you think about what that also means for Tesla, because let's not forget, they aren't just a mass car producer. What are these Teslas going to use? They're going to use the supercharging network. It's going to use the mobile mechanics that Tesla has. So the revenue income that will still happen from this sort of them deals and what other deals could come from this is what everyone, I think, is pricing in right now, which is huge. You know, Tesla isn't your ordinary car company. A lot of people always, and there's some shorts out there that kind of push that Tesla is the normal car company. It's not. It is far and away a better company than the traditional car makers because of what other income streams they have building into their business model, and that is also going to mean they do a lot better margins than historic car manufacturers as well. So yeah, I think that has obviously helps the stock a huge amount. Now I guess the big question that comes from Tesla now is that it is now $1,000. A few people have been shouting stock split, do a stock split again. I mean, you never know. I think the last time it did a stock split was that about 1,500-ish. So I'm sure there's potential that they're thinking that maybe, I wouldn't say this year, but next year if we have a good year, I won't put it past them to do probably another stock split. But there is kind of a thing here that you do look at this valuation now. You do look at a 1 trillion company. You do look at the P ratio of 330. Now, I think when you actually consider that this company is growing at like a 50% revenue rate and the profit they'll do next year, I think it is trading around about 100 forward price to earnings, which actually isn't terrible for a company like Tesla and what they have going. That isn't terrible. That is what Amazon for quite a few years traded at, and we know how big Amazon turned out to be. So yeah, it is a difficult one. Obviously I was thinking back at 950-ish, is it a time to kind of maybe trim this one? Now it's gone up even more. I'm thinking about it again, but you know, like I just said there, basically the potential for this company is still huge. So yeah, it's absolutely bonkers at the moment. So not much more I can add into that, but that's Tesla. Next up, DraftKings. So my biggest position in the stock market, a stock that has been a little bit quiet recently. I think since we came into the start of this year, you can see here around January, February time, we've pretty much done nothing, which I'm not complaining about because it has created some good opportunities to buy. I have built a very good position around this. I think my average position cost basis is now $51, which I'm pretty happy with. I'm not sure what's going on here, but Google for some reason has got the wrong market cap. I've had a few people message me about this. DraftKings is still around about a $20 billion company, so I'm not 100% sure what's going on here with Google. But like I said, for me personally, for DraftKings, I always thought that in the long term, I see this coming at a future 100 billion market cap company. And like I said, the share price hasn't done much, but what has happened inside the company is really good. And I think what is the growth that they're putting in and what they're building up right now has set this company, in my opinion, all ready to start come from. I would say when I started buying this, I was still buying this and going, I'm not buying this cheap. I am paying a bit of a premium for it, but I recognise how big this is going to be in the next few years. Whereas now we've kind of gone on nearly a full year, and I'm starting to get to the point now where, okay, it's actually now stayed at these prices for so long, the valuation's starting to catch up, that DraftKings, compared to when I started buying it, which I was paying like, I wasn't buying this at an undervalued price here, it's now getting to the point where you're looking at it and going, it's probably a little bit undervalued with how far the company has advanced this year, which is good. But at the same time, I've built my position up, so I'm in a perfect situation here. But the last since here really, we got back up to $60 and the stock has kind of fallen off like 25%. And there was a little bit of a pop yesterday. Probably not as much considering that this news took it down 25% and now it only has so far taken it up 5%. But the news that kind of took it down recently is because they were looking at buying Entain, and this was going to be a massive buyout. So you can see here, they were looking to buy this for 22 million. Now, considering that DraftKings is, obviously Google's got the wrong number here, is already around about 20 million. This was a massive purchase for a company of this size to buy this. And that's what spooked the stock price. This is why the stock price went down a while ago. They kind of got worried that the share dilution for DraftKings to buy this would have been a lot. And obviously, it's a big purchase. Whenever these big purchases happen, they're normally taken quite nervous. You would have seen it with PayPal and Pinterest. You saw what happened to PayPal's share price. So there's that kind of nervousness of this big buyout that's happening. It kind of took the share price down, but it's not happening now. So, I mean, we should see it go back up to $60, I guess. But it's not kind of happening at the moment. But from my point of view, from DraftKings, I understood why they were going to buy it, because you take out your third biggest competitor. That's going to help you massively in the long term, and you might as well do it now while they're a bit of a lower value, I guess. But the problem is, I guess, is that I think this would have been a really big value to pay for it. So it's good that DraftKings management have walked away and go, you know what, it's not worth it probably from the share dilution and everything like that. So, and the big thing is they're still going to have to compete with Flutter. Now, I think they'll still smash Flutter in the long term, but they would have really helped Flutter, and they would have took the cost on, and that would have benefited their second biggest rival. So you don't want to forget about them. So for me, I think this is DraftKings. I understand why they were going to do it, but I think it's probably a really good decision to move away from it. So yeah, overall that's everything with DraftKings. I'm looking forward to earnings as well. Obviously we should get some NFL numbers in there, so it's probably the one that I'm really looking forward to this earnings season. Probably DraftKings and Gang are the two I'm really looking forward to. So yeah, everything good there. Next up, INMD. INMD reported earnings. It did nothing, which is good because normally it goes down off earnings. But you could see that it did have a bit of a sharp bounce up recently. So overall the INMD earnings were fantastic, as normal, massive EPS beat, and this is off preliminary earnings as well. You'll see revenue as well was up 57% year over year, which is really good, and obviously the guidance has been strong. So yeah, I mean, when you look at INMD now, it is a $6 billion market cap company. I think at some point it will push that $10 billion valuation, but yeah, I think overall it's been good for INMD. Their earnings were pretty much in line. The little spike up that did happen a few days ago was because of some promotional content they put out there, which was showing off all the new products they do. And yeah, everything going good from the INMD point of view. I just not much too much to say about that one, but I just every so often I do like to just kind of point stuff out about INMD because it's a great company. And last one is Pinterest. Pinterest has been rough recently. The PayPal acquisition isn't going to happen, and because of that, the run up that we had because of the PayPal acquisition basically now has given it all back, and all them people that got in for that day trader or that attempt to make quick money and buy it and then hope the buyout happens and they get easy money from it hasn't worked out. Short-term traders, sometimes that happens when you're a short-term trader. That's why for me, I always just like being a long-term investor. I can just sit back and let it do its thing. The PayPal and Pinterest acquisition, obviously it wouldn't have been awful to get a quick payout, I guess. But I think Pinterest, I want to own Pinterest. I think it's a great play. It's very unique social media. It doesn't have the controversial subjects that Facebook has, and I think the story for Pinterest is just strong as ever. You know, it's very low monetized compared to the likes of a Facebook, so it has that to ramp up. Its international side of the platform's growing huge, and that's hardly monetized. And yeah, I think Pinterest is a company for me that, I obviously I've took some really good profit a while ago when it was at these sort of prices, and we took a 200-300% gain. Obviously it's had a bit of a pullback recently. I'm still 100% up on it, but now that it has pulled back into this $47 range, it's starting to get really interesting about Pinterest. I would not mind picking some shares up at some point. I think for me to pick some shares up, maybe the $40 range would be good. I think that it could get there off if it has earnings, and once again the user growth's weak. It is volatile off earnings, so one bad earnings, whether that be Q3 or Q4, could give that to me. So that's probably what I'm waiting for, but it is one that is getting a lot closer to the buying range now. But overall, I'm quite happy that it is going to stay as Pinterest, because like I said, I think it has a lot of promise as its platform on its own. So yeah. Overall, that's a couple of 4 news stories out there that hopefully a quick little overview was useful for you guys. If it was, hit that like button, that'd be absolutely amazing. And I'll see you on the next video.